Sandeep Tandon joins us here with Quant Mutual Fund. Let's understand what he makes of this madness in the market. Sandeep, what's your understanding? Do you think the collateral damage is done? Has the storm come and gone, or this is just the tip of the iceberg?
So, Nikunj, if you recollect, I have been talking about that 2023 will be very challenging. Okay, when I say challenging, it means we have talked about that it will be more volatile than 2022 because that is the last year of our volatility expansion thesis, which started in 2018 till 2023. Okay, now with this background, let's understand the larger picture. So, I want to answer the big picture first. A lot of people are very worried. We have seen a long-term top. Okay, and this is now a sell on rallies market. So let me address that. Okay. If you recollect in June 2000, when market made a new low in June 2022, I talked about that you will see all-time high as early in the current calendar year. That was 2022, because I talked about there was no characteristic which is required for a market top was not fulfilled. Okay. Market typically peaks out with some amount of euphoria, which has not happened so far. Okay. So similarly, if I have to look at 2023 now, yes, it will be volatile, but if we can say with good amount of confidence the top is in place, so answer is big no. Okay, because the characteristic from a behavior perspective, what we look at from a various conditions and euphoria which has happened across all the street has not happened. Okay, which means that if I have to look at larger perspective, you will see again all-time high as early as maybe in the last quarter of 2023 or maybe beginning of first half of 2024. So that gives a bigger perspective that we have not seen the long-term top, which most of the investors and market intermediaries are worried about. This is the what we can see from a predictive analytic thesis, and this is what our models are suggesting, that long-term top is not in place. Now let's look at the current situation from a very near-term perspective as well as medium-term perspective. Now, if I have to talk about from a very near-term perspective, yes, we have seen good amount of capitulative move happening in banking sector, maybe in the broader market also. But we have to keep in mind a lot of people are looking at the derivative data because VIX has not spiked in this entire fall except maybe last few days. Okay, a lot of people looking at the leverage position data, but look, you have to see that overall leverage activities are significantly down, and you will not get meaningful clues but just by looking at the derivative data. This selling has been largely driven by delivery based, more coming from the ETF or the passive fund side. And if you look at the overall impact, cost has risen significantly from the month of January 2023, which means on low volumes markets having a bigger impact, small buying or selling can lead to a bigger movements in the market. With that background, if I have to look at, maybe you can see a capitulative move happening, is already happened or maybe happening in a day or two in some of these broader market or banking sector, that becomes a buying opportunity. But if you ask me, even from the Nifty perspective, we have seen fear index spiking, the quant fear index has spiked, but has not spiked up to that extent what is required for a perfect bottom. Maybe I visualize a small scenario, what happened in May 2000 and June 2022, when you see a deep correction in the month of May, and then you see right from February to May, it was a meaningful correction and small rebound, and again correction in June. That could be a possibility, which looks like that you might see a bottoming formation now from a very near-term perspective, small recovery from again from a near-term perspective, and then could be further fall, which can lead to be a capitulation in the Nifty, and then you will see a meaningful rally. So that's a broader setup if I have to look at. But if you look at simultaneously in the market, look at the value thesis which is playing out.
Okay, so let's take things one by one. You've given us the long-term outlook, the short-term outlook. When you say that we are not done with the selling, we are at about 17,000 on the index, plus minus 1,100 points. The 2022 low is still a distance away. So are you making a case that we can go back to the 2022 lows?
So Nikunj, for us is very difficult to pinpoint that. Given the Indian macro, I don't think we are approaching there. Okay, maybe 16,000 certain level, maybe 16,800, 16,300. Maybe a lot of chartists can give a better answer than me on that aspect. But I think only from a macro perspective, things are not that bad as market people are looking at that. That's the reason I'm looking at more from a near-term problems or medium-term issues, but long-term perspective, I think India remains buy on dip. So I will see in today's context when I say 2023 will be volatile. The way we have restructured our portfolio, the safety is first, liquidity is secondary, and returns are third, in that order. So that way we are looking at the market, because if you manage next few months, I've been saying for a while, if you manage 2023, I think from a medium term investor and long term investor, I think it's a great opportunity to build exposure.
What are you doing with your schemes? Where have you locked gains? Where have you taken a hit and decided to exit? And what are you adding?
So if I relook at from, we release our January note on predictive analytics, where we have talked what has changed. So what has changed, the India risk appetite parameter has corrected significantly much earlier than the global market. So India risk appetite data and changed much earlier, let's say January onwards started drifting down. And in the month of February, we have seen in US market and some other economies also. So what has really changed is that the risk appetite has started declining. Liquidity conditions is actually quite mixed. In fact, I will say liquidity conditions has started improving from January onwards. Maybe in last few weeks time or so, some minor changes are here and there. But largely, if I look at, if these are longer term cycles, so when risk appetite bottoms out, it doesn't bottom in just one day. It's a phenomena which can take sometime like a quarter or two. So maybe if I have to say from a longer term perspective, maybe first half of 2023, it should bottom out. So that should be again an indication that by first half of 2023 globally also, when many markets, okay, you leave aside China, which has done extremely well, and that data points are still remain very constructive. Okay, Europe is another surprise element even for most of the people, where data points are more constructive than US and even the emerging market, where whole world has written off Europe. So China and Europe are in a better position from a macro data perspective, risk appetite perspective. So I think I'm slightly more optimistic on these economies, and maybe by second half of 2023 other markets also bottom out, and then you see a reasonably big up move happening in the second half. Okay, so I will play very safe. So I think, as I said, that the priority is safety. So we have obviously moved and rebuild our or rebalance our portfolio from a safety perspective, and the thesis which we like, our portfolio is still look at skewed towards value as a thesis. Maybe in this time they also have corrected, but as a longer term trend which we look at the whole market is so bearish, where the Nifty public sector bank has last week has made all-time high or lifetime high. Okay, so that is something where you look at the market is struggling and one index has made lifetime high. I don't know how many people actually noticed it. Okay, and this is without banks. Okay, so non-banking PSU, if you exclude that, most of the stocks have done extremely well. So I think the whole thesis revolves around how you park. So as I beginning of the year, I said metals could be surprise element, power sector should be a surprise element, PSU themes continues, okay, as it is, and value is a much larger theme. I call it a decade opportunity, not for 1 year or 1 quarter opportunity. So that's the way we have rebalanced our portfolio and remain skewed towards these names, and clearly avoiding anything which is grossly overowned or over researched or overvalued stock, which are predominantly growth stocks globally. I'm not talking about India. Globally, that thesis has worked very well. If you look at last 1 year, they have underperformed significantly. And that's the area where we see challenges.
Interesting. But Sandeep, fundamentally, what will change in the world construct or the India order for our markets to bottom out in the second half as you're predicting?
So I think the most important aspect where the whole world is eyeing is about the 10 years US yield, and how the inflation environment or the yields or what happened to the Fed. My view is that maybe by July's meeting or somewhere between July to September, you will see pause happening as well as cut can come. Okay, so I'm expecting between July to September somewhere in US, the Fed will start pausing and cutting. I'm not expecting even this month, like 22nd or 21st March is the meeting. The lot of strategists have talked about pause. I don't think pause is happening. Okay, given the data is still very not comfortable from a Fed perspective. So maybe it will not be 50 bips, it will be 25 bips, it could be 15 bips, but I think hike is coming. Okay, that's the way data points are endorsing. But second half, I think this can change. And if whatever reason there is a bigger casualty globally, because if you recollect Powell's statement, he talked about either inflation has to come down or there is a casualty. Okay, so we have seen small casualty, but if it leads to a bigger casualty, I think it can pause and it can even start correcting down, so that's the one trigger. But I tell you, these are more of a psychological data point than people look at. But if you look at purely from the Indian perspective, Indian banking sector are very resilient. Okay, there is no problem what is happening globally. Okay, so I will look as a buying opportunity. If you ask me, banking could be a phenomenal opportunity, both public sector as private sector. Even private sector bank, we have done very constructive because we were cautious earlier. They have also corrected a lot. So I think the private sector and public sector, both banking as a basket has a potential to give you highest return if somebody is willing to take 1 to 3 years perspective. Even you take 1 year perspective, I think banking Nifty will outperform other indices significantly from the current levels.
When you say banks are going to lead, Sandeep, what within banks is going to lead? Because, we've been talking about this on a daily basis. Banks are so divergent and, bifurcated right now. What the HDFC twins are doing is not what's happening with Kotak, SBI, ICICI Bank in its own trajectory. And, I don't know whatever happened to the entire PSB bout, ex-SBI.
So the way we look at the market right now, if you're talking about purely from banking perspective, if you look at this space has been a very favorite and a consensus trade for a long period of time, and anything which is consensus doesn't work. Okay, and if you really notice in last few months, this consensus trade has not played out very well because one simple reason: this FIs own a banking space in a big way, because India, if you look at 38 to 40% weightage is there for the banking stock of BFSI in general Nifty, and many ETFs globally are more towards liquid names or large cap name, by default banks are the preferred one. So it was a slightly one space where over ownership was there. And if you see now that which I talked about, passive selling continues, I think we are seeing some amount of capitulative move, if not on immediate basis, maybe in next 2 weeks time, next 3 weeks time. I think that's a capitulative phase has already begun. So I think if some of the FI over ownership which was there has corrected a lot, and I think similarly in the domestic side also, a lot of people have pruned down some of the names which you highlighted in last many months. So I think we are reaching. If you are bullish on Indian economy, then leverage purely from a leverage economy perspective, the banking are the first choice. Okay, now if I look at from a behavior perspective, from trading in the most admired territory or most over ownership perspective, I think they have not reached the other extreme, but they have corrected, and it becomes attractive now, or they might become more attractive in, let's say, another 7-10 days or maybe 2 weeks time. If I say, let's say, correction continues further also, I think there's a great opportunity to buy some of the names which you mentioned.
All right, Sandeep, appreciate your time. Thank you for joining us. A minute to go and then we'll get the first rates, almost 50 seconds now. And